Hello and welcome back to another video. Today we will talk about the energy sector, and we will answer to the question, is it time to say goodbye to the energy sector bull run? Looking at the price of oil, many investors may be inclined to think oil stocks are doing well. Many are. However, for investors in the energy sector fund, XLE, it's a complex time. This week, the index showed the first signs of slowing down, losing more than 20% in just over a week. This move may certainly come as a surprise for investors. With oil prices this high, most producers and energy-related stocks are seeing cash flows they haven't seen in more than a decade. This is true. However, a range of headwinds have combined to make energy stocks look less attractive right now. Chief among the concerns energy investors, and investors in general, have is the potential impact of soaring interest rates. Recession concerns have now come into focus, as many project this will be the future of the U.S. market amid higher rates. With a recession comes lower demand, and therefore lower future prices on oil. While good for consumers, that's not necessarily good for companies. Accordingly, many oil and gas companies have already begun to cut back on production in advance of weakening global demand. Such moves have drawn the ire of President Joe Biden, who, notoriously, has never been a friend of the traditional energy sector. Additionally, the strong of U.S. dollar has done its part on weakening the near-term outlook for all commodities. Given the fact that oil is priced in U.S. dollars in most major markets globally, a stronger dollar means less purchasing power for international buyers for oil. Let's dive into our point of view about the sector and its main securities, looking at the charts. As usual, we remind you, no one should trade watching this video, and we gently ask you to read the disclaimer at the end of it. The spread of the epidemic started the collapse of the energy sector, with a drop greater than 50% in less than a month. Having reached the bottom at $22.90, the index took a year to break the resistive phase out and initiate the lateralization one, until the explosive bull run started in September 2021. If we highlight the lateralization zone, following the break of dynamic resistance, and we use the Fibonacci lines, starting from relative highs to relative lows, we can identify the current high, coincident with the maximum extension of the lines. As soon as the maximum level was reached, the price turned, initiating a rapid reversal phase. We can assume a gradual descent of the price until it reaches the 50-period average, not excluding a possible return to the $77 level. Here, some of our thoughts on the chart. What do you think about this analysis? If you liked it, please leave a like on this page, and help us grow on this channel. Thank you.
Futures, stocks and options trading involves substantial risk of loss, and is not suitable for every investor. Please, read this disclaimer carefully. Thank you for watching.
Coneicom, Trading and Investing Research.